Hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. It was an extremely volatile day, even though it was a subdued start to the August series. We managed to, reclaim lost ground. In fact, the Nifty, which was below that 19,600 mark for a large part of the session, managed to recoup some of the losses in the last hour of trade. In fact, we kind of recovered nearly 70 points from day's low. And even the Sensex saw recovery of over 200 points from the day's low. So if you look at the Sensex, that ended down by about 100 points. Mind you, it had given up the 66,000 mark as well at one point in time. But of course, the mid and small cap indices continue to outperform the benchmarks. If you look at the mid cap index, that saw gains of 0.5% or thereabouts. Talking about the sectors then, banks and IT top drags today. So a lot of these private sector names like HDFC Bank, ICICI Bank, IndusInd Bank were on the losing end. From the IT pack, you had TCS, HCL Tech, Tech Mahindra, of course, after dismal performance in the first quarter, extending its losses as well. What really held out was the Realty pack. That was the top sectoral gainer yesterday as well, and today as well there was strength coming in that pocket. The index was up somewhere around 1% or thereabouts, and FMCG stocks also holding out. On the Nifty gainers front, you had Power Grid, that stock was up 3.5%. NTPC reports earnings tomorrow. Ahead of that, that stock was up in about 4% or thereabouts. Apollo Hospital, Dr. Reddy's. So a lot of these pharma names continue their a run from yesterday. Mind you, supply yesterday had hit a fresh 52-week high. It was up 10% or thereabouts. But today, on the gainers list, we have the likes of Dr. Reddy's, Apollo Hospitals, from the pharma pack. M&M, of course, yesterday it was the top loser on the index. Today, it managed to regain ground and, I think ended high by about 1% or thereabouts. On the losers front, Bajaj Finserv, HDFC Bank, BPCL, TCS, Tata Motors, Axis Bank. So those were the top losers. Look at some of the pharma names. Lupin. This share hit a fresh 52-week high after the successful or satisfactory evaluation by USFDA on two of its plants, where the USFDA had issued warning letters back in 2017. That's the Goa unit as well as the Pithampur unit. So that was a big positive for Lupin, and the stock price, of course, did cool off a bit after hitting a fresh 52-week high. BEL from the mid-cap end of the market rallied after it posted its highest ever order win in quarter one. In fact, it has also guided for order inflow of 20,000 crores for FY24. On the back of that, that stock was up and about. IOC, that stock slipped to post its first quarter earnings. Numbers were largely in line, but I think Petchem business saw some weakness, and GRMs, of course, were below estimates. M&M Financial tanked after the first quarter profit missed estimates. In fact, the provisions jumped on a quarter-on-quarter basis. So that stock was down somewhere around 4% or thereabouts. Indian Bank, on the other hand, good set of numbers, jumped somewhere around 3%. And sorry. Railtel was one loser after it reported weakness or decline in its first quarter revenues. Pretty sharp decline on a quarter-on-quarter basis. On the Nifty 500, you had the likes of Prestige Estate, Godfrey Phillips. Of course, yesterday that stock was up and about, I think, 10% or thereabouts. Even today, it's among the top Nifty 500 gainers. Sterling Wilson, NCC, Tata Power. And on the flip side, you had the likes of JK Lakshmi Cement, Sona BLW. Numbers are fine, but analysts see limited upside from here. So that stock was among losers on Nifty 500. Supreme Industries, Blue Dart after first quarter numbers, and RVNL as the OFS opened for retail investors today. So those were largely the movers and shakers on the Lal Street today. Coming to some of the stocks that are on my radar this afternoon, we'll also be introducing a guest and talking about stocks with him. But let me quickly take you through the stocks that are on my list. Indiabulls Housing. This stock was, among a stock that, clocked in great gains in today's session. Board approved raising up to 35,000 crore rupees via an issue of NCD or bonds. Now, board has also approved a final dividend of 1 rupees 25 paise per share for FY23. Remember, SocGen has picked up a stake, over 0.5% stake in the company recently. I think this came just about yesterday. And, stock is, up and about. It's 15% away from its 52-week highs. But the good part is that, most of the bad news or gloom is behind when it comes to Indiabulls Housing, given the fact that the management has given some great commentary. They've said that, the weakness is behind and the company is back on growth path. And as it's back on growth path, it will resume giving dividends to shareholders. And of course, it is also said that the company is well capitalized. Stock is 15% away from 52-week highs. I think on a YTD basis, it's still down, but prospects looking good given the fact that management has given some good commentary going forward. And the fundraise, of course, will be raised in a year's time going forward after the shareholder note. Let me then get on board my guest for today, Nilesh Jain of Centrum Broking, joining in. I want to throw in a question on some of these NBFC stocks to Nilesh. Nilesh, Indiabulls Housing, of course, solid gains coming in today. On the flip side, you had M&M Finance reporting weak set of numbers. And of course, we saw the stock reaction coming in as well. What are your thoughts on these two stocks, Indiabulls Housing and M&M Finance?
Hi, very good afternoon to you, Nandita. Well, both the stocks, in fact, are trading exactly opposite. If you look at the Mahindra and Mahindra structure, from the higher levels, we have witnessed some amount of profit booking and selling pressure. And now the stock has breached its 50-day moving average on the lower side. The structure, the major structure, although looks on a positive side, but there could be possibility of some selling pressure at high level that cannot be ruled out. So at current level, I think it is better to avoid taking any contra bet. We might see the further downtrend towards 285. That could be a good entry level in order to make a fresh entry, keeping stop loss below 270. And positionally, we might see a stock to move towards 300 to 300, 320 to 330. Indiabulls Housing Finance, a lot of volatility we usually see in this particular counter. But finally, it looks like it has broken out from its consolidation, and also it has formed a rounding bottom pattern on a daily time frame chart. So structure-wise, we might see a follow-up buying and follow-up move towards 145 to 150 cannot be ruled out. But it is not advisable to take any fresh entry at current level, given the fact that the stock has already rallied in last 3 consecutive sessions from 120 to 135. So it is better to wait for some decline, and it can be bought from a trading point of view in the range of 125 to 130, keeping stop loss below 120.
All right, that's the view then. Wait for declines to buy into some of them. But let's talk about Intellect Design. That's another stock that's on my list. This company, in fact, this stock has snapped a 7-day losing streak. It's clocked its biggest single-day gains in over 2 months. In fact, added somewhere around 1,000 crore rupees to its market cap today itself. Numbers are pretty good, 18% jump in revenue, EBITDA margin, 23% or thereabouts, profit growth of 36%. Even collections on a quarter-on-quarter basis have been pretty good. Now, it has closed somewhere around 11 deals in the first quarter itself. And on a YTD basis, the stock is up 50% or thereabouts. Even though it has run up quite a bit, I think price to earnings, if you look at the 12-month trailing PE, it's somewhere around 31.1, which is lower compared to its sector PE, which is somewhere around 57 or thereabouts. But, of course, some of these mid-cap companies have not had a very great, quarterly showing, the likes of Persistent. In fact, I think we saw a good amount of correction come into these stocks once they reported their numbers. But, two stocks that have stood out today, of course, Intellect Design is one, and the other one is Birlasoft. These two stocks clocked in a very smart uptick, and numbers were also pretty good. How would you play these two?
Well, both the stocks have almost similar sort of setup. If you look at on the monthly time frame chart, so counters like Intellect, where we have seen gains for the fourth straight month, and it has rebounded very sharply from the levels of 400. Now it has reached almost close to 700 mark. And remember, this stock has underperformed, and we have witnessed a gradual decline in a lot of underperformance in last 1 year. After hitting highs of near about 1,000, the stock corrected almost 60% from the highs. Now, what we are witnessing is a strong trend reversal as of now on the chart. And today it has ended on its upper circuit. So there could be possibility of further follow-up buying momentum, which might continue in the coming week as well. And the upside is very much open for 720 to 750. Overall, from position point of view, we expect this counter to outperform and move in the range of 800 to 850. On the other hand, Birlasoft, comparatively, this particular counter is looking quite stronger on the chart. And similarly, it has gained the momentum for the fourth straight month. Now the upside is very much open for 450 to 480 on immediate basis. And from position point of view, we might see counter moving towards 500 plus. So at current level, yes, one can remain long and keeping stop loss below 375. The upside is open up for 450 to 480.
Right, that's the call on Birlasoft and Intellect. Let's talk about Marico. The numbers have just come out, and on the face of it, it looks like an inline set, given the fact that EBITDA margins have come in at 23.2% vis-a-vis expectations of the poll also threw up a number somewhere similar to 23.2%. Profit growth has been slightly above, but revenues are slightly below estimates. So, all in all, we saw the stock hit a fresh 52-week high ahead of numbers. Do you think it'll, see some bit of a selling pressure coming in, given the fact that the numbers haven't really been all that, off the mark just yet? I don't have the volume growth figure yet, but on the face of it, numbers look pretty okay.
These sort of numbers, I think it has already factored in the price. This week, this counter was up close to 6%. And now looking at the numbers, I think there could be possibility of some profit taking at the high levels on Monday. But from position point of view, I think if it sustains above 560 mark, then there could be possibility of stock moving towards 600 plus. So as of now, on immediate basis, we might see some consolidation. But from positional point of view, I think this stock has a potential to move towards 620 to 650. So one can stay put, keeping stop loss below 520, and fresh entry can be made below 520, 540 for the upside target of 600 plus.
All right, that's the view on Marico. Looks like the earnings are already in the price. But let's talk about some of the pharma names then. Cipla, of course, yesterday saw a 10% run after good numbers. Of course, there was a exclusive news break on CNBC TV18 that the promoters will be looking to sell stake to PE investors. So that stock was up 10%. We had Dr. Reddy's following suit after good set of numbers. In fact, I think Dr. Reddy's is among the top gainers today as well. Lupin on the resolution almost resolution of US FDA issues hit a fresh 52-week highs but cooled off slightly from day's highs. Pharma names started participating now. Would you say it's good time to enter some of these stocks?
I think it's slightly late to enter into the pharma. This week, majority of the pharma have outperformed. In fact, Nifty Pharma Index was one of the top gainers this week. Now, given the fact that counters like Cipla, which has given a sharp run-up of more than 12%, we have also seen a run-up from Lupin of more than 4%. So these are not the level to make a fresh entry, but if somebody is already holding the long position, can stay put, keeping a trading stop loss. For Cipla, we see upside target of 1220 to 1250. And the downside, if you look at the support, which is placed around 1140. And out of all the pharma counters, we are still liking Lupin. Lupin has a potential to move towards 1050 to 1080. From positional point of view, it can be bought on declines and can be bought in a staggered manner. Keeping stop loss below 920, it can be added in the portfolio for positional target of 1050 to 1080. And index heavyweight Sun Pharma, this particular counter is also looking positive on the chart, and we might see targets near about 1180 to 1200 in the short term time frame. It can again be bought in the range of 1100 to 1120, keeping stop loss below 1060.
Right, that's the view on the pharma pack then. But let's talk about SBI. Numbers are coming out next week. How would you advise investors to position themselves in an SBI ahead of the numbers?
I think if you look at purely from technical point of view, the structure looks positive. But again, what we are witnessing ahead of the numbers, majority of the counters have already shown quite a bit of run up. So the numbers are factoring in. There could be possibility that after numbers or maybe decent set of numbers, we might see some profit taking up from the high levels. But if we take a positional call, then this particular counter, State Bank of India, still has the potential to move towards 650. So that's the immediate target that one can eye on, and it can be added in the portfolio from the PSU basket, keeping stop loss below 595.
All right, that's the view then. But let's talk about some of the cement names as well. ACC reported a solid set of numbers in the first quarter. I think the stock did see a reaction as well over the last 5 sessions. It's up somewhere around 8% or thereabouts. But on the other hand, smaller players like JK Lakshmi Cement, I mean, today that stock was down somewhere around 7.5%. How do you position yourself in some of the smaller cement names? Do you think you could look at the bigger names now and avoid smaller names, or how should you deal with this sector?
Absolutely, you have rightly mentioned the focus should be on the large cap names like India Cement, Ultrarec Cement, ACC, and Ambuja. So these are the few counters that we are liking from the cement pack. Now, today we have seen a fresh breakout in India Cement. It was consolidating since a long time. Now, today post breakout about 214, I think there's still potential to move towards 220 to 225. So from trading point of view, India Cement is looking positive. One can keep a stop loss below 208. And apart from that, large cap names like Ultratech Cement, where we have seen a constant outperformance, and this particular counter is trading at all-time high levels. So this particular counter can be added in the portfolio from a positional point of view. The target comes around 8,800 to 9,000. One can keep a stop loss below 8,000. And apart from that, smaller names, I think it is better to stay away for the time being.
All right, stay away from the smaller cement names. So that's the view. Lastly, about M&M. Of course, we've seen a great run on some of these auto names. I think on a YTD basis, this stock is up 16.5%. Of course, nothing compares to Tata Motors. That's of course been the best performing auto stock this year. But of course, M&M picked up a stake in RBL Bank, and then we saw some bit of a reaction coming in on stock. Today, it has managed to come off those cut some of the losses, but going forward before earnings, do you think this will remain an overhang, or how do you see the stock on charts?
Well, yesterday we saw a big gap down opening and it has formed a big bearish candle on the daily time frame chart. Now today, although there was an attempt to recoup the loss, but the stock traded in the range of yesterday's candle. Now looking at the overall setup, there could be possibility of another round of selling pressure at the high levels that cannot be ruled out. The major structure, although is looking on a positive side, but I think it is better to stay away for the time being. There could be possibility of the Mahindra & Mahindra stock to move in the range of 1440 to 1400. Maybe at 1400 it could be a good value buying opportunity. But as of now, it is better to stay away in the range of 1500 to 1550. If at all it comes, then it is a good level to exit from the position. From the auto pack, we are liking Hero MotoCorp. Overall structure is looking very much on a positive side. And we have seen a lot of consolidation of last 1.5 year. The stock did not perform, but now I think it's a time this particular stock to move in the range of 3300 to 3350 and can be bought at current level and on decline, keeping stop loss below 3000. So Hero MotoCorp from the auto.
Right, I think we lost Nilesh's feed. Can we get him back, Nilesh?
Yes,
Right.
am I audible Rita,
Yeah,
now?
yeah, I can hear you. Go on.
Right. So I was saying Mahindra & Mahindra, we might see some selling pressure at the high levels. So it is better to stay away for the time being. This particular counter may test the levels of 1440 to 1400 in the near term. So it is better to stay away. And the better opportunities from the auto pack, we believe that Hero MotoCorp may outperform. And looking at the consolidation that we saw in last 1.5 years, I think the stock is ready to move in the range of 3300 to 3350. So at current level, it's a good buying opportunity. Keeping stop loss below 3000 can be added in the portfolio at current level and on decline. From positional point of view, 3300 to 3500 could be the potential target.
All right, Hero Moto looking good from the auto pack. Before I come to you for any kind of stock recommendation for next week, let me ask you about the markets. Given the fact that we've seen the Nifty, in fact, markets rather reverse course in the second half of the session. Yesterday, of course, we saw the weakness intensify, and today we saw markets trimming most of the losses. Do you expect this weakness or consolidation to continue into next week?
Absolutely, Nandita. We saw a weak set of rollover on Nifty and Bank Nifty. So yesterday there was an expiry for Nifty and Bank Nifty, and if you look at the rollover from the Bank Nifty space, which was quite disappointed, and if you look at the overall technical structure as well, that is indicating that Bank Nifty may underperform compared to the Nifty index. And if you talk about the support zone, now that is placed at 45,000. If at all it breaches 45,000 on the lower side, then it might slip towards 44,500 to 44,000. But as of now, the trend is still on a positive side till the time we see any breakdown. So there are no indication as of now, but the support needs to be watched out for the coming week. We expect some consolidation in the Nifty and Bank Nifty. So as far as the levels are concerned for the Nifty index, we have seen 84% of rollover in the Nifty index for the August series, but rollover are more sort of on a negative side. So the important support zone for the Nifty index is placed at 19,550 to 19,500. That's the level, that's the exact level from where we have seen a recovery in the second half of the session for the day. So watch out for that level on immediate basis. Below 19,500, we might see Nifty inching towards 19,000 as well. So that needs to be closely watched out for in the coming week. One important factor that we saw in this entire week, the broader markets have outperformed. Mid-cap index was up more than 1.5%. So the focus should be on the broader market rather than in the index, specifically Nifty and Bank Nifty. So watch out for stock-specific action in the coming week, which we believe is likely to continue. The volatility index is currently at 10 level. We have seen a decline of 12% this week. which is very much in the comfort zone for the bulls at 10 level. So till the time we doesn't see any breakout above 12 in the IV, so we believe there could be buying interest which might emerge from the support zone in the coming week.
All right, support levels of somewhere around 550 to 19,500. But before I let you go, Nilesh, anything that's looking good on the charts for next week? Any couple of stocks that you would recommend?
Right. So a couple of stocks that we are liking. So from defense space, we have seen good attraction in the counters like HAL, BEL. So HAL, Hindustan Aeronautics Limited, that particular counter is looking positive. Today we have seen good build up on the long side. More than 9% open interest was added. So the upside is very much open for 4,000 to 4,050. One can keep a stop loss below 3,885. One can buy HAL. The other counter that we are liking is IRCTC. So after a long time, we have seen a technical breakout on the chart from a falling trend line. So the structure looks positive for immediate target of 645 to 650. One can keep a stop loss below 618. So IRCTC and HAL, so these are the two counter that we are liking for the coming week.
All right, IRCTC and HAL looking attractive for the coming week. With that, Nilesh, thanks a lot for taking out time and joining in this afternoon and sharing your thoughts with us. Wish you a very happy weekend.
Thank you, Nandita. Wish you the same.
Thank you. Well, with that, we've come to the end of this edition of Closing Bell. Of course, if you have any comments or feedback that you want to share with us, leave that in the comment section below. And any other feedback, feel free to leave it in the comment section. With that, it's a goodbye from me. Thanks a lot for tuning in. Wish you guys a very happy weekend. And I'll be back in the markets at 8:30 a.m. on Monday morning. So don't forget to tune in. Thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.